Alrighty, everyone. Good morning. Hope you guys are doing well. Today is Friday, March the 27th. Overall markets, nice rejections on the SPY yesterday off our previous day lows. We kind of had that nice pop and fade towards the downside. A couple news factors that we had yesterday. Number one, earlier into morning, Trump was speaking. He kind of mentioned a couple things, but overall, basically the market continued to drop towards the downside, as I mentioned yesterday. With the war continuing, most likely we're just going to end up gravitating down in towards really the news candle low that we had originally from Monday. So that's where you can see the market is gravitating towards basically this news candle low, right? The original candle that pushed the markets towards the upside. This was war news, right? Basically wanting the war to be over, or that was on the thesis that the war was going to be over. But as I mentioned, right, the longer the war continues, right, the more the market is basically just going to drop to the original area. So SPY and Q is now gravitating towards the downside. I'll kind of talk about the levels coming into today, plus the higher time frames. We are actually breaking underneath a key level of support. So very key inflection point coming to the markets this morning. We'll talk about that all here in a second. Before we do that, what's up, everyone? Good morning. Good morning, P1, Marcus, Victor. Good morning, Cody, Maria. Good morning, Dragon, Martin, 50, Senna, Lamit, Cosme, Cosmin, Detecto. Good morning, Chris, Deuce, Juan, B Roots. Good morning, Knight. What's up, Mr. Incredible? Do you offer any one-on-one? I actually personally do not. If I am struggling a bit with the 15-minute opening range. If you do have any questions regarding that, you can always drop them in the chat. You can also email me as well. It should be in the description. So if you do have any questions regarding that, you can always send over an email. What's up, everyone? Good morning. I hope you guys are doing well. Good morning, Daily New Juan. Yeah, with that being said, let me pull up the economic calendar, and then we will head on to the charts for today. Okay, so coming into market open here, let's kind of scroll down. As you can see, we have a lot of kind of news, some of the red folder news that we had yesterday as well. We end up having a nice kind of pop in the in the after hours. Immediately kind of faded back towards the downside, and now you can see in the pre-market we're actually underneath our previous day low. So number one, let's actually just go back into this. There's kind of a lot of things to talk about coming to market open. But let's go on to the economic calendar for today. As you can see here, we do have some orange folder news events, so no red folder news event, but we do have the revised consumer sentiment. Obviously, the main things that are going on are a lot more important than the actual red folder and orange folder news itself. But this is something to keep in mind. But of course, right, we have the war news going on, so that's going to be the number one most important. Number two, let's now go on to the charts to show you guys exactly what we're looking for coming into today. Number one, let's go into the higher time frames. There's kind of a lot of things to talk about here, as I mentioned. Starting off with the SPY and Qs. As you can see right here, we are currently at a higher time frame level support, which we're currently breaking here in the pre-market. So you can see touch here, touch on Monday, buyer stepped in, came up for that retest, and now you can see nice continuation back towards the downside. Currently strong candle close underneath. Now we're actually opening up at our 640 here. So for the SPY, let's look at this here on the weekly time frame. We kind of talked about this being our major level of support, which is our 650. If that doesn't hold, the next level is going to be down into this weekly order block, 630, down into that 620, and then all the way down in towards that retest level, which is our 600. So I would just mark out this level. So we have our 650, 630. We can mark out that 620 and then all the way down in towards that 600. So these are the key levels of support here for the SPY. We are breaking underneath this key level of support currently here in the pre-market. Similar thing here on the QQQ. We are currently now breaking underneath our key level of support 580. The Qs is relatively weak compared to the SPY. Next level of support, I'd say right here, kind of this 560. And then next level all the way down and towards that 530, which of course is our previous retest level and our 2025 highs. So coming into market open here today. So as I mentioned, if we're looking at this week's price action, we had that huge news candle, which was the war news that we had. The longer the war goes on, as I mentioned, we're just going to gravitate back down and towards our news candle low. And now you can see the markets are right at our news candle low, which happens to be our 642. So coming into market open here for the SPY, right, we're going to mark out this 642 along with our previous day highs, along with our Monday's lows here as well. If we want to see, right, just basically this is based off an hourly outlook. If we want to see a bounce play here in the markets, we need to see that hold of our 644, and we'd see a mini bounce back up and towards our 646 here on the SPY coming into market open. If we now get underneath that 644 and that 642, we're going to see this continue push down in the overall market, or if we kind of reject here off our previous day lows, we can see some more downside here as well. So let's go back onto the lower time frames. The levels that I do have marked out coming into today, I'm going to mark out this 645, and then other levels we can have marked out here now as well is just going to be that pre-market low that we had on Monday. So coming into today, as I mentioned, previous day lows 645 along with our 642. If we want to see some downside, kind of similar game plan to yesterday, nice kind of drop in the pre-market. Pop and fade here off our previous day low is going to be one of our number one scenarios if we do want to see some downside. So kind of similar thesis on the SPY coming into market open. If we can get that pop up and towards that previous day lows, consolidate, potential fade underneath that previous day lows for continuation towards the downside. This is going to be the number one scenario. Another scenario, of course, is going to be the break underneath our pre-market lows. More aggressive scenario towards the downside right off the bat, but this is also in play here as well. So let's keep an eye out on our previous day lows, our 642, which is our pre-market lows. So we could be looking for the previous day low retest, either the reclaim later into the session, or now it would be the retest here off our pre-market lows coming into market open. So a couple scenarios I'll be looking for. My favorite is going to be that pop and fade. Very similar thesis to yesterday for that continued push towards the downside. Now, if we're looking for any sort of mean reversion, right, similar thing to yesterday, we could see potentially that kind of that pre-market low bounce right off the bat for this push up in towards our 645. Really, as I mentioned, I don't really have too many long scenarios. It would just be kind of this pre-market low bounce. If, let's say, strong buyers do want to step in here off our pre-market lows, and let's say we have a very bullish first 5-minute candle, then we could be looking for the reclaim back above our previous day lows, 645. So this is what we have for the SPY coming into market open. Or as I mentioned, keep an eye out on your previous day lows, which coincides with your Monday's lows. Sorry, this is your Friday's lows of last week. And then you can also keep an eye out on your low that we had this week, which is your pre-market from Monday. So keep an eye out on your 645 along with your 642. As for the ES, let me just kind of refine some of these levels that we have here as well. But we can add a brand new level, which is just going to be that pre-market level here as well, 6480. Another level that we can have, previous day low here on the ES, which happens to be our 63. It's a pretty big level, but we can have our previous day lows marked out here and drag this up into our low that we created here last Friday. So these are the levels that I have for the ES coming into market open. What we have here, exact same game plan, 6490s along with the ES 6530. If we do want to see some upside here, as I mentioned, potential pre-market low bounce for a mini mean reversion back up and towards our 6530. If you do want to see some downside is in play today. Pop and fade here off our previous day lows for this rejection pushback towards the downside, or the reclaim later into the session, or now you'd be waiting for the break underneath our pre-market lows for this continued pushback towards the downside here as well. So this is what I have for the ES and SPY coming into market open here today. Now let's go on to the NQ. So the NQ here, as I mentioned, this one is a lot weaker than the SPY, and that's a good sign if you do want to see some downside. So let's go on to the QQQ 1 hour chart first. As you can see, this was the news candle that we had. This was the war news on Monday. As I mentioned earlier into the week, yesterday, right? The longer the war continues, the more we're just going to end up dropping. And we're going to end up gravitating back down and towards this news candle low. So as you can see right here, now we're actually a lot weaker. We broke underneath this news candle low, or we gravitated there yesterday. And now you can see we're actually well underneath it here in the pre-market as well, compared to the SPY, which is right at our news candle low. So whenever the QQQ is weaker than the SPY, that's a good sign that we're going to have more continuation lower towards the downside, and any sort of upside is going to be a lot more difficult, right? The Qs has to lead the market back higher if it's going to be a real move. So for the Qs coming into market open here and moving forward, key levels that we can just have marked out, news candle low plus our previous day lows as well, if we want to see some downside. As long as you can now maintain underneath our 576, we're going to be looking for a move lower. If you look at this on the daily chart here, fairly key level, you can just kind of mark this out. 576 along with our 580, touch here, and now we're breaking underneath here. With a strong daily candle close, we are most likely going to have continuation towards the downside. Next levels here based off the daily chart is going to be your 560, right? Kind of similar to last week on Friday, right? That was our key level 580. Of course, this one very far away, not expecting it to hit 560 today, but that is the next key level. Other levels we can have marked out 568, and we have this kind of small gap fill back towards the downside here as well. You can just mark out all these lows here on the daily time frame. But for the Qs coming into market open, let's go back onto the lower time frames. We can remove a couple levels here now as well. But the main level that we're going to have marked out today is going to be that previous day low, 574. Previous day lows here on the SPY, on the Qs. If we do want to see some downside, pop and fade off our previous day lows for continuation lower. Really the number one scenario that we have on the Qs, pop and fade. Another possible scenario is now going to be underneath our pre-market lows for continuation towards the downside here as well. Right, of course, the pop and fade is going to be the best scenario. Similar thing with the SPY. Very kind of similar to yesterday. We end up having that nice pop. Either the SPY, I would like to see the SPY retest off your previous day lows, or even the Qs retest off your previous day lows. But kind of similar thing to yesterday, nice kind of bounce here off our pre-market lows, and then we end up fading back towards the downside. So kind of similar game plan, right? We're looking for the bounce and then fade off our previous day lows for that continued pushback towards the downside here on the overall markets. If you do want to see some some upside here, it would have to be some sort of kind of pre-market low bounce for a push up in towards our 574. Don't really like this, but this is something you could keep an eye out for coming into market open. Of course, right, you could be looking for longs above your 574. That most likely won't set up unless you had really strong buyers right off the bat. All right, now let's go on to some of the tickers that I have coming into today. If you guys do have any tickers or any charts, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. Okay, let's go on to the SMH, and then we'll head on to a few other tickers here now as well. Number one, as you can see for the SMH, still fairly bullish, but of course this one kind of rejecting off key levels. Overall market dropping towards the downside here as well. We just went from the top of the range, and now we're actually back at the bottom of the range. So for the SMH, top of the range, rejections here offer 400, and now we're basically back at the bottom of the range, which is our 378. If you did miss any tickers or the major indices, you can always just refresh the stream. And let's go back on to The SMH here on the 15-minute time frame. As for the key levels coming into today, let's just kind of make brand new levels here. We can mark out that previous day lows, which also coincides with our Friday's lows of last week and another low that we created here on Thursday of last week. So for the SMH moving forward, we can just have this general area marked out 380. So that's going to be the key level. If you do want to see some downside coming into market open here, we like to see the pop and fade. Similar game plan like the SPY and Qs, pop and fade off our previous day lows for a continuation towards the downside. Right, it's going to be off that 381. Really, the only scenario I do have for a continuation lower, if we reclaim back above our 380, then potentially you can see a little bit of a mean reversion back towards upside 374 here and above. So that's what we have for the SMH, IWM. This one, rejection, not as big of a drop, but kind of back inside the middle of the range. Now let's go on to Tesla and the rest of the tech names here as well. Alrighty. Let's go into Tesla here on the higher time frame. So as you can see, we are creating a downtrend break, but currently rejecting off that level, rejecting off that gap fill here as well. And now we're breaking underneath really this 390 key level of support, now kind of turning into resistance. So we talked about this the other day. Very key level here on Tesla was that kind of 396, looking for that fade off that level for this continued pushback towards the downside. So for Tesla, there's kind of a lot of things that I have marked out, but let's kind of just remove a couple levels here, or we can just refine some levels. Really now the main thing here is going to be that previous day lows, and then that low that we created all the way back down from Friday of last week. So for Tesla here, really the only levels that matter today is going to be our previous day lows here, 372. So our 372 is going to be a key level. Yesterday, nice kind of rejection off this 384 and pushed down in towards that 378. And now we're back down in towards that 372. So coming into market open here for Tesla, the key level that we're going to have marked out previous day lows here as well, 372. If we do want to see some downside potential pop and fade off that 372 for continuation down in towards that 368, right? Pop and fade here off our previous day lows. Very similar game plan to yesterday, right? Similar thing, right? Pop and then fade off our level. Similar thing today, pop and then kind of fade off our level towards the downside. If we do want to see some upside, right, potential kind of pre-market low bounce or off our 368 for a push up in towards this 372 here. Only scenario. All right, let's go into a few other tickers here. Nvidia, talked about this one underneath our previous day lows, can see some more downside. Nvidia is in a very key spot as well. We've talked about this one multiple times right into our key level of support. This is a one where the market is breaking underneath a key level of support here. So the overall broader market breaking underneath our 580. Showing a little bit more weakness here. Nvidia is something to actually keep an eye out for, right? Touch here, another touch, multiple touches here offer 171. There's a couple nice opportunities that can form, here on Nvidia. Number one, you have the break underneath our level of support for a push down in towards that 164. This is very much well in play, or you could be looking for kind of the bounce off our 170 once again for a push back towards the upside. So a couple scenarios, as I mentioned. Let's just go back onto the lower time frames here now as well. For Nvidia, the key levels that I have marked out is just going to be that 171. So let's keep an eye out on Nvidia coming to market open here. Just draw out this general area 171. As I mentioned, two scenarios, bounce play here off our pre-market lows for a continued push back up and towards this 175. If we do break underneath that 171, higher time frame level support here as well, we could see a bigger push towards the downside. So that's kind of with the QQQ thesis along with the SMH breaking underneath support here. So keep an eye out on Nvidia. You can now just mark out, if I was to refine this level, you can just mark out that low that we created from last week, and we could drag this down in towards our previous day lows, 171 here. Let's go into AMD. Key level here on AMD. Yesterday, we kind of talked about the potential fade here off our 220 higher time frame level of resistance, basically the exact level, right? Kind of this gap fill area. We talked about that we had this gap fill towards the downside. If we reject, we can see this push down in towards that 203 here. If we're looking at the hourly time frame here now as well, we're just kind of right back inside this range. So nice rejections here off that 220. And now we're back underneath that 206. For AMD, expecting a little bit more kind of consolidation here. Did quite a big of a move this week. Obviously, the news candle low that we had on Monday is all the way down towards that 198. So that is technically in play. If we reject off our 206, we can see that push down in towards that 198. But key levels, yeah, 190, 206, and then you can also mark out your previous day lows here as well. Apple, one of the only tickers that's holding up compared to the overall markets, kind of right into a key level support. Apple, really only down about like 5%, or I think it's down maybe like 7% year to date compared to all the other Mag 7 names, which are down a lot more significantly. But for Apple, just kind of right at a key level support, not really too much to talk about. Key levels now. Kind of got rid of one key level, but basically it's just going to be that 246. Other levels that we have marked out here now is going to be that 254. So for Apple, just keep an eye out on our 254 coming into market open here. If you want to see continuation above your 254, if we want to see some continuation lower, we need the rejection off our 254 for that push down in towards that 252. As for a few other tickers, the main tickers towards the downside that I mentioned yesterday, Microsoft, Google, and Meta, all based off the daily time frame for continuation towards the downside. So for Google, break underneath this key level of support. Next level really is actually all the way down towards our 270 here. So break underneath support, continuation down in towards that 270. Microsoft, similar thing, breaking underneath a key level support. We can expect some continuation towards the downside. We do have this huge daily gap on the, we have this huge daily gap down in towards that 365, which we end up filling here. So nice gap fill on Microsoft. Now the next levels I have really 350 and all the way down towards that 340 here. So break underneath support, nice continuation down on on Microsoft, and then even Meta talked about this one. This was the trade of the day yesterday towards the downside underneath this 380. Key level support, we could see some more downside. Nice kind of daily candle towards the lows yesterday on Meta. Also another daily gap, as you can see, back from May of last year where we had this kind of earnings gap up. Okay, let's go back onto the lower time frames here on a couple of these tickers. So number one, let's go back onto Google. Key levels coming to market open is just going to be that previous day low. So mark this out, drag it over. Previous day low, potential pop and fade coming to market open for continuation lower. Microsoft, similar thing. This one, nice kind of pop up and towards key levels. Yesterday, we're looking for the pop and fade off our 370 or the pop and fade here off our 372. This one ended up having a little bit of a bigger pop, but still making lower highs. Once it got back underneath, you end up having this nice fade. The reclaim setup underneath that 372 or underneath that 370 offered a nice continued pushback towards the downside. Key levels today, previous day lows, similar thing, potential pop and fade coming to market open for a continued pushback towards the downside here on Microsoft. Meta, let's mark out that previous day lows, drag it up. In this case, it's our 345. So a couple scenarios on Meta, pop and fade here off our previous day lows for continuation, or now in this case, pop up in towards our pre-market highs. And then you could be looking for a fade off this level here as well, down in towards your previous day lows and below. So this is what we have for Meta coming to market open. As for Amazon, the key levels that we have marked out today on the hourly time frame, just a little bit more kind of consolidation here, not too much to talk about. But for Amazon, if you do want to see a continuation lower, now we need to break back underneath this 205. So this 205, we've had multiple touches here. need to see the break underneath 205 if we do want to see continuation towards the downside. So levels that we can have marked out: previous day lows, drag this over underneath previous day lows 207. You can see it push down in towards our 205 here and below. And then Netflix, this one's actually bouncing nicely. We do have this downtrend break here as well that we can kind of talk about. So for Netflix, tried breaking it yesterday, or we kind of had this downtrend break yesterday. You can kind of mark this out. Kind of this retest of this 92.50. Now we're trying to break back above this 93.50. So for Netflix, now I just like to see continuation above this 93.50. So that's going to be the key level coming into market open, and moving forward, we can be looking for longs on Netflix as long as we maintain above our 93.50 for that continued pushback towards the upside. Okay, with that being said, that was all the major tech names for today. Let's kind of go over the game plan once more. If you guys do have any charts or any tickers, you guys can now drop them in the chat. We'll go over them for the next kind of 5 to 10 minutes, and then I will get ready for market open here. All right, as for the spine keys, as I mentioned, key levels that we do have marked out coming into today is just going to be that previous day low. So game plan today is just going to be looking for that pop and fade here on the major indices. That's the main game plan for the day. Qs off our 574. SPY here off our 645 for continuation towards the downside. And then for the rest of the tickers, very similar game plan across the board, right? Pop and fade here on Tesla towards the downside. Nvidia now would have to get back underneath. Plus, it's a higher time frame key level. So Nvidia, let's keep an eye on Nvidia. Open and playing both sides on this one today. Tesla, room down in towards that 366. AMD, right, 206. So that's going to be the key level that we have marked out. And of course, we could still be looking for continuation lower on Google, Microsoft, Meta. These are the weakest tickers, of course. And then if you do want to look for some upside, Netflix is showing a little bit more strength here in the pre-market. As for everything else, right, you can see a couple names dropping, right? Palantir underneath that 150. Now you can see some more downside here, kind of flipping. Next level on Palantir 140. So maintain underneath that 150, continuation towards the downside. Every other ticker, MU showing more weakness, right? Even a lot of the semis and memory names that we talked about, showing a lot more weakness compared to the overall market. So coming into market open here today, as I mentioned, right, just based off of the price action that we do have, we're going to be looking for that pop and fade for continuation. I'm expecting some more downside here in the markets, breaking underneath key levels. We'll see what does shape up over the weekend. We're probably going to have some more news. So that is something to keep in mind, right? If we are looking for trading opportunities today, we'll be looking for that pop and fade. Besides that, right, just be a little bit more cautious. Don't hold anything over the weekend unless you have a big buffer, because we're either going to have a huge gap down or a nice gap up. So we're going to have a big move regardless over the weekend. That's kind of what the theme has been as of late. Pretty big moves in the overnight sessions. So if you do want to look for intraday opportunity today, make sure to stay on the higher time frames as well. The best guide is really honestly the 15-minute time frame. If you do want to be on the 1-minute time frame, you can, but make sure you are managing your positions on the 15-minute time frame. Yeah, besides that, I am going to call it a day here. Gonna have a trade recap for you guys later tonight as well. And yeah, with that being said, I'm going to call it a day. Hopefully you guys did enjoy it. If you did, appreciate if you guys drop a like and sub, and I'll see you guys all tomorrow. Or sorry, I'll see you guys all next week. Take care, everyone. Peace.